Hello, everyone. Welcome back to another weekly watch list video for you guys here today. Before we get started, before we jump into the charts, a lot of research was done in preparation for this video. So if you take the 2 seconds, hit the thumbs up for the video, and then we'll just get started. Now, I'm going to jump right in because there's a lot of information to get to, but I think it's all very important for the week ahead. Now, what we have been seeing in the market overall has been dips are getting bought up, support levels are supporting very nicely. The market has been very, very bullish, which is great to see. It doesn't even matter. We've seen nothing but bad news, and the stock market continues to rally. That is a sign of a beautiful amount of investors' confidence getting back into the market, institutional investors buying up shares and getting that cash back into the equity market. So we've seen some really nice moves. We've also had terrible news. You have high oil prices. You have the war. Inflation is crazy. You have the bond yields that went through the roof. Usually when we have seen this, especially some really, really quick moves in it, it has rattled the equity market, especially tech, when those high yields, go up and interest rates, usually you would see the tech market pull back. That hasn't happened. We're bucking the trend here, and things are looking really, really good in the market. When this does happen, the Fed has been much more hawkish than we had thought. So, you're having all of these things that would normally make a market pull back. Instead, you've seen the market go up. So that's great. That's good. We corrected. This is a technical bounce off of a correction, and that's what you're seeing. So you saw a lot of selling, and now you're seeing, buying back those shares at cheaper prices. This is normal in a bull market. It's normal to see a correction 10, 15, 20% in a bull market. And then you saw the buying. So everything has been, really, much easier to trade. I think a lot of you out there that are watching this, when the market is like this, it's just so much easier to trade. The dips are getting bought up. You have more confidence going long. And, those rug pulls that we talk about during the trading sessions, they're happening here and there, but they're not happening like they were for the first couple of months of the year. So that's good. So getting into the earnings for the week, this is the earnings that we see here. There's one that I'm really interested in. That's Micron. That is after the bell on Tuesday. So I'll be watching that one pretty closely. We have also, let's see here, the economic calendar for Thursday. So basically there's two things in the economic calendar this week that I'm looking at. It's the inflation here on Thursday at 8:30, the PCE price index. That's going to move markets. Be aware of that on Thursday. And then on Friday, you have the non-farms payroll. That is also going to be, of interest. There will be, market moving, type of numbers here. It doesn't really last long, but it will move markets just a little bit. The 10-year, this is the Treasury yield that I've been talking about. And Citibank came out and they had said that they're now calling for 4 50 basis point hikes. So instead of the 0.25% raises, they're expecting 4 of the 50% raise hikes starting in May. All of this, you have Powell that spoke on Monday. Inflation is much too high. Okay. I think we all can understand, yes, it is. And they're going to do whatever they have to do to try to get that lower. But are they behind the curve a little bit? Probably. They probably should have done this a long time ago. So, Goldman Sachs on Monday, they upped their forecast right here to 50 basis points. Same thing. Same thing that Citigroup did. So they're going to be raising rates at a much more hawkish level than we had originally thought. And did it hurt the market? No, it didn't hurt the market at all. The market just continued to go higher into these areas that we're talking about. So if we look at this, this is the daily chart for the S&P 500. This is what I like to look at in determining whether the trend is, bullish or whether the trend is more bearish. Are we coming into, overhead supply, which I don't normally like to go long if we're approaching that level? Are we at support? Are we at a demand zone where I would love to get long equities? So if I'm looking at this on the daily chart, I can see here, that's a great bounce, great recovery. We're over the 20. We're over the 50. We're over the 200. So we've cleared all these hurdles. We've cleared some resistance, but we are coming into some resistance. Do not fool yourself here and think that the market on Monday and Tuesday is just going to continue to go straight up. Look at this blue line. This is the 20 EMA. This is something on the daily chart that you can really, take a look at and see how it's been support and then how it's been resistance right around here. All year it tries to go above it, cuts under it, and then we broke through it. Now, we broke through the 20 EMA. The only thing is, if we look at how far extended we are now off of this, it's over 3%. So we're over 3% over the 20 EMA. The other times that we've been this extended off the 20 EMA is right back here. So if we do this, this was about the same thing, 3%, and then it pulls back. Right here, big extension off of the 20, just about 3%, and then it pulls back. This is definitely very, very overextended. Now, we did come up here, we did pull back. This is a level here of support. So, what we could technically see is a bit of consolidation now. You can see, if you look back in September here, this is where we topped out in 2021, and that's where we saw support here, a lot of resistance here, and now we're approaching that same exact spot. So would I be jumping in long right now, knowing how extended we are here, knowing that this entire area here is some overhead supply, and there could be a little bit of a pullback before we burst through this level. So, something that I would be looking at is maybe support at the 200 at 446. And then, of course, the 444 has been great support. So, I think I would be a little hesitant right now until we prove ourselves here, because we are at an extended off the 20. We are at, overhead supply. This is not an area that should be cut through very, very easily. Couldn't do it here. And it was support here. Like I said, a very big pullback here. So, keep that in mind, this 453 on the SPY. Let's see what happens in this area and see if maybe we see a little pullback first and then that next leg higher. But this is a nice candle. I like this candle on Friday. Nice bullish hammer. Looks good. But like I said, we're coming into that overhead supply. So if we look at the Qs, very similar type of situation here. I would say, you know, if we can break out of this general area, this 362, then your obvious level, next level of resistance is going to be the 200 moving average here, which is going to coincide here with the rejections that we saw before that. Once again, a very nice candle on the day. We sold all the way down to 355 to close at 359. That's a nice sign. That shows that the dip buyers are here. But we could chop around a little bit. Like I said, the overall market could chop around a bit before we see new highs. So just keep that in mind. If we look at the NQ, I want to take a look at this on the 4-hour chart. And I'm just going to take that out. So this is the year right here. We saw a very nice break of this downward trend line, okay? This descending resistance trend line, broke out from it, retested it, came back up to this 14,400 that was acting as resistance here, chopped around there for a bit, and then broke out. So that's a nice breakout on the NQ, which is just the Nasdaq Futures. This is something that I monitor. I like to look at this one every single day, along with the ES. Very similar thing here for the year. This one has more strength than the Qs. This has, you know, the 500 biggest companies in it. It's not just all tech. So this one is definitely a lot more bullish than the Qs. So this is a breakout of this descending resistance trend line. And these are currently my levels of interest that I see. This could be the next area that we see resistance, or, you know, we just keep going higher from here. So that's the ES. This is the S&P 500 futures. The next one is the Russell 2K. Let's look at it on the daily chart. The IWM is the Russell 2K futures, just so you guys know. Very obvious level here of resistance. So what was support all year in 2021 turned into resistance, not once right here, but we saw a second one right here. This looks like it's very range bound. It would be nice to break up into this huge amount of supply, but it's going to be hard to do that. And, you know, we've seen some really nice strength off of the bottom here, a lot of demand, but now we're coming into resistance. So this is the IWM. This is the Russell 2K small caps. So just keep that in mind. If you are trading the Russell 2K futures, that you're going to be coming into some resistance. Maybe wait until this stuff breaks out, retests, and then, you know, go long. It's a bullish market at the moment, so I wouldn't really love to short really anything at this point, because like we've seen, the dips are getting bought up. So if I'm trading a market that's trending up, I'm going to be, you know, buying calls. I'm going to be buying stock long. I'm not going to be going against the trend. So, you know, I'm going to wait until those good entries are there and then go long. So a couple of picks, or, you know, some stocks to look at for this week is, one of them is Citibank here. And I'm going to look at this one on, not the weekly, but the 3-year, 1 day. We're going to go back all the way to 2021 here. It was support for Citibank here at the 57.50. It was support for Citibank here at 57.50. Again, twice in 2021. It broke below that this year. So we broke below it, tried to get back above, and rejected hard. So if I'm looking at this chart, this is something that I would be looking to short at around this area. And if you do that, your stop can be pretty tight because this is a level. Look at these rejections here. So there was no follow through. Even when the market was good, it didn't follow through. So this is kind of diverging from the overall market. This chart looks weak to me. So that would be something I would be looking to short if I could get a good entry there. Something that has earnings this week is Micron. This can trade all over the place. But what we have seen off previous December earnings are huge moves. Huge moves from 80 to 100 in a couple of trading days. They have earnings here, like I said, on Tuesday after the bell. Could it be something that moves, the same way? It's possible. They are expecting to have very good earnings. So keep Micron on your watch list, see what it does this week. AMD, looks very good. Broke this descending trend line like we've seen in the overall market. But just because something breaks out of these trend lines, it doesn't mean that it's just going to come up and now it's got blue sky. There's a lot of overhead resistance. There's going to be resistance here. So, while it's nice to get that break of the trend line, all you're doing is coming right back up into resistance. So, keep those in mind. VIX, very nice on the year, coming back down, breaking that trend line. So this is the inverse of the stock market. When the stock market goes up, the VIX comes back down. This is a good sign. I would love to see this get back down to normal levels. So each year seems like it has its, nice calm level. So back here in 2019, you saw, the lows around 11, and then you had, crazy coronavirus. And then back in 2021, it came back down to 14s, and that was a great time to be buying. The market was grinding higher. This fear gauge was lower, so things were looking good. Well, this year has been crazy, but now it's coming back down. Where will it start to settle for the VIX to be on a nice uptrending market? So if it was 14 here, the year before coronavirus, it was 11. Will this one settle around 18 or 16? Something like that. So just keep the VIX in mind. This is going to move in an inverse relationship to the overall market. So I think we covered a lot here. Want to show you guys what a breakout looks like. So Cliff has been on our watch list in many, many videos. It has been in our watch list. These lines here, they've been with me for a while. It was range bound for a very long time. And then this year, it broke this. It broke this support level like just about every other stock, but it regained it, came back, right back to the support level, and then just ripped up into this previous resistance. And then we see the breakout. I mean, at this point, this is not going to just keep continuing straight up. This move here is a massive move. So, if you missed it, you missed it. Don't chase the FOMO. If you really like it, wait until it comes back down. A lot of these will retest these breakout levels. So just don't get into the habit of chasing things. Even though I wish I was in this trade, I wasn't. There's a million other opportunities out there. So it is what it is. Hope you guys enjoyed this long-winded, market analysis. There's just always so much to get to. If you did, hit the thumbs up. And if you're new, subscribe. I have new videos just about every single day for you guys. So that's it, guys. I'll see you back with another one tomorrow. Take care.